Ever wondered who really calls the shots at one of Australia's biggest banks? You see those familiar red and white logos everywhere, sponsoring sports teams, offering home loans, and holding onto the savings of millions. But who exactly owns Westpac? It's a question that might not cross your mind every day, but the answer reveals a fascinating look into the world of finance and how major institutions are structured. Think about it. When you deposit money, take out a loan, or even just walk past a Westpac branch, you're interacting with a massive financial entity. It's not owned by a single person, like a small family business. Instead, the ownership structure of a major public company like Westpac is much more complex and distributed. To understand who owns Westpac, we need to delve into the concept of a publicly listed company. Westpac Banking Corporation is listed on the Australian Securities Exchange, or ASX, under the ticker code WBC. This means that instead of being owned by a private individual or a small group of investors, shares of Westpac are available for the public to buy and sell. So, who are these public owners? Well, it's a diverse group. The largest chunk of ownership typically lies with institutional investors. These are big players in the financial world, such as superannuation funds, like your retirement savings, investment management firms, and insurance companies. They manage vast sums of money on behalf of their clients, and a portion of that often goes into holding shares of stable and established companies like Westpac. Think of your own superannuation fund. Chances are, a small part of your retirement savings is invested in companies listed on the ASX, and that could very well include Westpac. So, in a way, millions of Australians indirectly own a tiny slice of the bank through their superannuation and other investments. Beyond these large institutional investors, there are also numerous individual shareholders. These are everyday people who have decided to invest their own money in Westpac shares, hoping to benefit from dividends and potential increases in the share price. The number of individual shareholders can be quite large, further distributing the ownership of the company. It's important to understand that this ownership isn't static. The buying and selling of shares on the ASX constantly changes the distribution of ownership. Large institutional investors might increase or decrease their holdings based on their investment strategies and market conditions, and individual investors are constantly trading shares as well. Therefore, there isn't one single entity that can definitively say, "I own Westpac." Instead, it's a collective ownership spread across a multitude of institutional and individual investors, both within Australia and internationally. These shareholders have a vested interest in the bank's performance, as its profitability directly impacts the value of their shares and the dividends they receive. Understanding this distributed ownership model is key to grasping how major corporations like Westpac operate. They are accountable to their shareholders, who elect a board of directors to oversee the management of the company and ensure it acts in the best interests of its owners. So, the next time you see that Westpac logo, remember that behind it isn't a single powerful individual, but a vast network of investors, from massive super funds managing your retirement to individual Australians investing for their future. It's a slice of the Australian financial landscape owned by a broad spectrum of people and institutions. With that said, thanks for watching, and until next time.